Last Friday, the Nigerian Bureau of Statistics released a report which shows that throughout last year, 2020, 26 out of the 36 states in the Federation and the Federal Capital Territory received zero foreign direct investment. Ostensibly, the imprint of COVID-19 pandemic can be clearly seen in this disturbing trend. For a further breakdown of this and how the situation can possibly play out in terms of prospects for recovery, unemployment, infrastructure development, education, healthcare, and industrial production, we're now being joined by Johnson Chukwu, financial analyst, managing director, and chief executive officer of Cowry Asset Management Company Limited. Welcome to the program. Good morning, Mr. Chukwu.
Good morning, Tiri. Thank you for having me.
On the point of correction, it's Chief Johnson Chukwu.
Oh, Chief Chukwu, we're delighted to have you.
How are you? Happy New Year.
Happy New Year, Dr. Ruben Abati and Rufai.
Yes. Happy New Year to you.
Well, Chief Chukwu, Tundu has already asked you the question. Zero investment in 26 states out of 36. What are the implications? And what do we need to do to correct that kind of situation?
You know, for me, if you look at the pattern of capital importation into the country, you will only observe one clear and well-defined pattern. That is the fact that Lagos State is a major recipient, the largest recipient of capital importation in the country, and it's been consistent. If you look at other states, you can actually say there is some level of some pattern in their capital importation receipts. Is states like Rivers State and the Federal Capital Territory. The other states are largely sporadic, apart from a state like Kaduna State has come up consistently in the past couple of years since Mr. Rufai became the governor. So, but the key thing you have to look at is that most of the states in the country are not built or do not have policies that attract private capital, particularly foreign private capital into the states. Many of them are running cap in hand to the federation account to collect allocations. And they are now building the supporting infrastructure that will incentivize private sector operators to invest in those states. Lagos is unique in some ways. One, it is a financial capital of the country, so foreign portfolio inflows come to Lagos or come through Lagos. A lot of foreign direct investment also pass through Lagos. And then the other inflows, other investments, which are largely loans, also pass through the financial system. So Lagos is naturally the largest recipient. If you look at the trend in the past couple of years, you observe that Lagos accounts for more than 80% of capital importation into the country, with either FCT or Rivers State coming second, distant second, and sometimes, like I said, you see Kaduna State coming up. Otherwise, the other states, there's actually no pattern, and it has to do with what are the structures or the fiscal structures in these states. Lagos State is virtually the only state that can survive on its internally generated revenue. The other states are living on handouts from the federation account, and that is not what will attract foreign portfolio investment, particularly because that's what matters most if you talk about other states.
Thank you. Now, according to the Nigerian Office for Trade Negotiations, Nigeria has recorded its highest FDI for the past 2 years in Q3 2020, and the nation attracted $414 million. I mean, it's a drop in the bucket when you compare it to like India, for example. But what do you make of this trend, especially compared to the rather dismal outing from the states, as you just discussed?
If you look at, like for me, what matters most is the foreign direct investment, which you said we attracted reasonably a large quantity last in the third quarter. But that is a drop in the auction, because if you consider the fact that the entire 2020 total foreign direct investment was only $251 million. Entire, that is for the fourth quarter. And for the entire year, total capital importation in the country was only $9.6 billion, of which foreign portfolio investment accounted for more than 50% of that. So the key thing that if you look at a $400 million capital import, foreign direct investment, is a drop in the auction, given the size of this economy. Recall that our economy is the largest economy in Africa, and as it stands today, we are among the top 25 economies in the world, but we're not getting attracting the kind of capital we should be attracting, principally because we need to look at ourselves and ask ourselves, why is this economy not a preferred destination to foreign direct investors? Why would they rather to go to Ghana? Why would they rather go to a country like Rwanda? These are much smaller economies. The Ghanaian economy is just marginally bigger than the Lagos economy. But foreign direct investors are going to Ghana. We are seeing companies going to set up vehicle assembly and manufacturing plants in Ghana. They are not coming to the country. So there must be something that is wrong with our own physical and policy environment. And that, for me, should be the issue on the table. We should ask ourselves, why are we not attracting investment? Why should a country as big as Nigeria attract only 1 billion foreign capital importation in the entire 3 months of the last quarter? Granted, there was COVID, but is that a justification why this economy will only get $9.6 billion in 2020? And until we begin to ask those questions, we are not going to work on improving our ease of doing business and our global competitive index. And those are the factors that are keeping away investors from coming here.
I mean, it's quite shocking. For the size of the economy, we are not attractive, you know, where people don't want to look at us twice. So what are the things, you know, we can do? Is there some form of economic cosmetology, you know, we can do? Like, we need to be attractive. This economy is buoyant. We say we're the giant of Africa, but nobody wants to come here. I was looking at the chart. Most people are going to 2 places in Africa, South Africa, Egypt. It's quite shocking. We say we're good in oil and gas. Egypt is getting more investment in oil and gas than Nigeria. A lot of people are talking about gas in the Egyptian peninsula and things like that. It's happening.
Okay, let me start from Egypt. In the first place, if you look at investment in the oil and gas sector, Nigeria has been battling with what they call to review the fiscal framework that governs our oil and gas sector for the past 20 years. The petroleum industry bill, we've been on it for more than 20 years, and we still don't have a hang on it until the current minister is saying that, look, by the end of the first quarter of this year, maybe we'll have that piece of legislation passed into law. And if you have uncertainty in the legal and commercial framework that govern a particular sector of your economy, you are not going to see people putting in money in that economy because there's a limit of risk investors want to take. And so that's why I said, but that takes me to your primary question. Are there things we should do to improve our attractiveness as a destination for investors or to investors? Yes, there are millions and millions of things we should do. We should start from the lowest hanging fruit. Let's look at the issue of security. When I looked at the state distribution of capital importation, I tried to see if there's a pattern. In as much as the pattern is not discernible, but if you consider the fact that virtually none of the states in the Northeast attracted any form of capital importation in last year, you see a lot of the states that have heightened level of insecurity, investors are shying away from them. So one of the areas that you need to address is the issue of insecurity. I do not know how many people go to Syria to go and invest today, or go to Lebanon to go and invest. People don't go where the safety of their lives cannot be guaranteed. The other things we need to look at, basic infrastructure, transport infrastructure, power infrastructure, they are critical to reduce the cost of doing business and improve on your ease of doing business. We need to address those things. We need to look at our laws. We need to look at our regulations. And we need to look at the quality of our educational system. Are we producing the quality of labor given the size of our population that will make us attractive? We need to look at our trade policies. So the key thing, we need to take a holistic look at our strategy to attract investors. And if we do not address those, some of them are very minor issues. We've improved on visa on arrival and attracted a lot of people coming to this country. Unlike before, I think in one of the programs I attended about 4 years ago, one of the issues was that we couldn't even have the visa tickets in our embassies in other countries.
Chief Chukwu, we need to take a short break. When we return, you can conclude your thoughts, and we'll talk about CBN and cryptocurrencies. We'll be right back. Welcome back to the morning show here on the Arise News channel. Our guest is Chief Johnson Chukwu, Financial Analyst, Managing Director, and Chief Executive Officer of Cowry Asset Management Company Limited. Chief Johnson Chukwu, thank you for staying with us. Well, before we went on break, I said I wanted you to comment on the latest CBN policy on cryptocurrencies. As a man who runs an organization that manages securities, that offers investment advice, what do you think of that policy, its implementation, and the implications for the growing fintech industry in Nigeria? Okay,
Ruben, I was laughing when you called me chief because you seem to be one of the few people that remind me I'm a chief.
Because I got an invitation for the chieftaincy ceremony, so I remember.
I'm actually a chief from Ugweke, but it's only you that remind me of that. Sometimes when I go to the village, they call me chief. I turn to look for who they are calling. Okay, the issue of the cryptocurrency has been grossly debated in several media platforms. And I spoke on one of your programs on Friday on this issue. And my position is clear, and that is that the central bank has a very delicate issue to deal with. One is that it has to contend with maintaining financial system stability. And it is worried that cryptocurrency could disrupt part of that mandate of the central bank, which is to maintain financial system stability. And as you know, every currency must find a way of exchanging with other currencies. So currencies have a way of intermingling with every other currency. And that's why currencies are acceptable, because if you're holding a Ghanaian cedi and there's no way of converting it to use it to in Nigeria, either by converting first to dollar and then converting to naira, you will not hold Ghanaian cedi. So similarly, those who are holding cryptocurrency instruments like Bitcoin and other currencies have ways of converting into other currencies, either when they use them to make purchases, and the claimants or the recipients of those payments have to convert to other currencies. So there is some level of interface or intermingling between cryptocurrencies and fiat money, and people will have to recognize that. So that makes it imperative for the central banks in the world to monitor the cryptocurrency and make sure it does not disrupt their financial system. And I think that must be the concerns of the central bank. And one of those who said, look, central bank came short of presenting the logic behind the restriction of bank accounts by cryptocurrency operators or traders. And interestingly, they came back on 7th to give the reasons why they had to come out with that regulation, among which is that they are concerned that users of this money could actually be using them for illegal purposes. But that, be that as it may, it might not be enough justification to outrightly ban banks from allowing people who are operating cryptocurrencies to operate them. My take is that we have to accept that this advancement in technology has come to stay with us. The central banks, not just Nigerian central bank, a lot of central banks are worried about the implications of cryptocurrency because there's still not enough understanding of these digital monies. So the central banks must find a way of regulating the cryptocurrencies or integrating them into the financial system. It doesn't look like we can wish away the evolution of these digital monies. And that's my take. Granted that the central banks, like I said, not just Nigerian central banks are worried, but I have come to look at the advancement in technology, and I realized that when there's a new knowledge, the tendency is to resist it. But ultimately, that new knowledge, as it stands, will overwhelm the system if the system does not find ways of accommodating it. So the central bank must find ways of understanding cryptocurrency, integrate into the financial system, just like the Securities and Exchange Commission has actually come up, say they are coming up with a regulation or guidelines on cryptocurrencies or digital money. And the Securities and Exchange Commission said that digital currencies are financial assets, which they will regulate. So that will be my position on it.
Chief Johnson Chukwu for joining us on The Money Issue. Thank you very much indeed.